preparing to live stream the meeting. Got it. Meeting is now streaming live on Facebook. It's still saying that we're preparing, so I don't know how much we can believe that, Chris. But,
I think we're pretty prepared.
All right, I think we're up and running. Hi, everybody. Welcome to another episode of Money Mondays. We're coming at you early, entirely my fault because I have a place to be. But fortunately, we are here. We are joined by the one, the only, Chris Tanner. Bow, 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 bow. Let me just share this to my Facebook page, as always.
Ooh, I did that quicker than you today.
Oh, man. All right. My internet is acting a little bit slow, but there we are. Boom, boom. It's thinking very hard, folks. My internet is thinking so hard. Here we go. Share now, public. Perfect. Awesome. We have a fantastic topic in mind for everybody today. The topic is, of course, you might see in our description and our title, NFTs, non-fungible tokens, which are one of the latest innovations from blockchain technology that powers things like cryptocurrency. But before we get into that, a couple quick housekeeping things. Most important of all is that this Wednesday, October 27th, Chris and I are going to be presenting an online event, Real Estate 101 Home Ownership. There's so many ways that it's so easy to make a mistake when you're buying or refinancing a home. There's so many pitfalls, so many traps you can accidentally fall into without even knowing. So on this Wednesday, Chris and I are going to be offering a free webinar on how to avoid some of those pitfalls, how to avoid some of those traps, to make sure that your home, which can be, for most people, it's the single largest investment that they make in their lives. How do you make sure that that investment is getting you your money's worth, basically? The little catchphrase that I got for myself as I was making my half of the presentation was making sure that it's safe as houses. So join us on Wednesday, the 27th for Real Estate 101. Chris and I are both very excited to be doing that. Definitely looking forward to that. But now, cryptocurrency. It's still really exciting. I don't know how much you've been reading about it, Chris. I don't own any crypto of any kind, but I still get people who are texting me trying to get me to buy some, and I definitely see the appeal. It's a new technology, and the latest thing that I've seen a lot about are these non-fungible tokens. Chris, have you heard about these before I mention them?
Yes, I've heard about them as well. And just like you, Henry, I'm not somebody who's invested in either cryptocurrencies or NFTs, as they're called, other things you can own in the similar arena. But yes, I've been hearing a lot about them recently.
Yeah, and for those of you who don't know what NFTs are, what non-fungible tokens are, if you think about cryptocurrency is the best way that I've heard to describe is it is basically like the flagship product for the blockchain technology, but that's what it is. It's ultimately a product. Blockchain technology, that idea of this online decentralized ledger that lets people do transactions in a decentralized way that's theoretically not being managed by any one company or government. That technology, it's still evolving, and that's what gets me excited. This is because this is kind of like the early days of the internet. And like, if you're thinking about like the late 90s, the internet was around, but in the late 90s, nobody could have predicted what Facebook is today. We're going live on Facebook. Nobody could have predicted YouTube the way it is today, or TikTok the way that it is today. You know, the internet continued to evolve, and then the products on the internet continued to evolve as well. So it's very exciting. Non-fungible tokens are basically tied to that blockchain. People are able to tie digital. I think the way that you describe, Chris, do you remember the words you used to describe it earlier? Go ahead. I don't want to steal your time.
So NFTs facilitate the tracking of ownership and value in the digital world. So you can assign ownership and value to digital art, whether that's music or videos or images. That's how it's being used currently. But before NFTs existed, something that was on the internet, there was this problem of artists not getting compensated for their work. If it was on the internet, they had this trade-off of getting something to as many people as possible versus actually getting paid for their work. And once it was on the internet, it was kind of gone.
Yeah, kind of. If you remember, oh, I didn't see the new one of the new Marvel movies with the martial arts superhero, the Seven Seals, the Seven Rings. Yeah, I don't remember. Oh man, I'm a terrible nerd right now. I don't remember it. It was like Simon Lee or something like that was the guy's name, and he was also on Kim's Convenience Store. Amazing actor. But one of the things that came after he became this mega superstar is that he used to be on stock photos, which because I used to be an actor, it's a very big thing when you do something on the internet. The rule of thumb is it's on there forever. You lose rights to it because people can just download, copy it, put it up somewhere else, and you have no way of controlling your digital footprint once it's out there. What NFTs do is that they basically give a way of tracking your digital presence. And I've already seen some artists using NFTs, and in kind of in a related way, making their own kind of cryptocurrency, because it's got to be tied to a cryptocurrency, because it's got to be tied to the blockchain right now. But it gives a way of tracking who actually owns this. And there have been some pretty famous cases recently where there's things like, oh, somebody bought the original footage of this one slam dunk for like thousands of dollars or something, and it's pretty ridiculous right now. One expert that I saw recently described it as the Wild West, which the whole crypto space, which I think is actually a pretty accurate depiction of a lot of the things that are going on, because it's really hard to regulate because it's all digital, and people are discovering new things every single day, which is on one hand really exciting, and I'm really excited for where this could potentially evolve. On the other hand, because it's the Wild West, I wouldn't necessarily. This is also tied to why I'm not putting money into it yet, because it's still evolving. It's still doing this, and it's got volatility, and I'm waiting to even out so people have a better idea of how the technology is going to be used in years to come. Which again, this is something else that Chris and I were talking about, the blockchain technology as a whole. Let me stop there. Let's take it back to the 90s. Let's imagine we're in the 90s. The internet is just starting out. And Chris, if you had been a financial advisor in the 90s, and somebody came up to you and said, "Hey, I just started a .com. Will you invest $100,000 in me?" What would you do? What would you say?
I would probably start by saying no, to not get their hopes up, but then want to dig into it a little bit. Okay, so am I in a position that it makes sense to put $100,000 towards one given investment? And what do I know about this person and this idea or company website that they have? What are my chances of actually getting my money back and having success in it? But that's a great comparison, Henry, that in the late 90s, there was a lot of excitement about what was going on with the internet, as can be seen by what was happening in the stock market and internet related stocks really going on a run. But nobody really knew how everything was going to shake out. And then when the dot-com bubble burst in the early 2000s, that's when people came back to reality on the actual value of some of these companies, some of these ideas and websites that were far overblown. And then over time, the market actually adjusted for, okay, here is how the internet is truly going to be used, and that technology has been more accurately valued with time.
Yeah, and we're kind of seeing a similar thing going on with the speculation revolving the new cryptocurrencies that are coming out, NFTs and things like that, which is just like people in the late 90s, very exciting. But one of the things that I kind of took away from what you said, Chris, is that you kind of would approach it as though you were investing in, if you were in the late 90s, you'd approach it investing in a company, a .com company, as if you were investing in private equity, which we've been talking. It's been a topic of discussion around our office for quite a bit lately. Private equity and the role that it plays, and I think that's pretty telling. Do you think there's a parallel between investing in private equity or investing in cryptocurrency today?
I think there definitely is, because we've seen there are gains to be had, and people experience gains in private equity. I'm not saying they're the same, but in broad terms, they're similar. It's an area that maybe could be appropriate for investing, provided your foundation, your complete picture is in place. It's definitely not the starting point. And in our firm, we have the system of 4 major asset classes that each behave a slightly different way and each have a different role in the portfolio. And within the 4 asset classes, there's 3 that are the starting point: real estate, bonds and cash, or interest earning, and stocks, which is owning businesses. Those 3 are your starting point. That's where most of your wealth should be. Bitcoin or cryptocurrencies, NFTs, and private equity, all of those we classify under one big umbrella of alternatives, which again, we have a place for that, but it's only after the first 3 are in place and well diversified.
Yeah, and bringing it back to NFTs and non-fungible tokens, I've even heard them described online as their market is even more like collectibles. Which we also do have a place for collectibles in our model. Our model's extremely robust, and no matter how the technology changes, we have a discussion of like, oh, where does this belong? Oh, well, it's behaving like these assets over here. So our model is extremely robust, and NFTs, the newest thing that's coming from the blockchain, does still fit in our model as collectibles, which are still within these alternate investment category for us, because it's still ultimately speculative. Just real quick, just to kind of, I think we've hit our main points, but before we wrap up, there are still innovations being made in the blockchain space, because as like Chris described it, NFTs are a prime example of tracking ownership and transfer of digital assets that can be used in a lot of different ways, including things like supply chain management, which is something that caught my interest. Honestly, last year I was taking a course on hospitality management, and it's not something that people typically think of, but it's coming to the fore today because there's so many issues with the supply chain that are kind of compounding against each other right now. And the thought is that potentially in the future, the blockchain will be able to help supply chain management by tracking the transfer of these specific assets much easier across countries, across nations, as people are crossing borders. So this space is continuing to evolve. There's still a lot to look forward to, but just like MySpace, well, people were excited about MySpace, but MySpace wasn't the end all be all. It is also possible that everything we're experiencing now is a Friendster or a MySpace or something like that, and we have yet to see what the final form of this blockchain technology could be. We don't know what the Facebook or the Twitter of blockchain will be yet, because we're just not there in the timeline. But this is definitely a very interesting space that we're keeping an eye on here. If you're interested in if you're interested in learning how you can fit cryptocurrency, NFTs into your overall financial profile, like we said, our model is extremely robust and does take those into account. So you have different things, different assets working towards different goals. So I invite you to come talk to me, talk to Chris, send us a message. We'd love to talk to you. If you're an experienced person in crypto, we'd also just love to hear about your experience as well. So feel free to leave us a message. Thank you so much for joining us here for another episode of Money Monday, the early bird edition. Again, my name is Henry. I'm your friend in finance, and we have Chris Tanner. Thank you all so much. Hope you all have a great week. Bye.
Yeah. Bye, everyone.